Let's explore that data set in a bit more detail. Lucille Jones is a deals intelligence analyst at Refinitiv. She joins us live on the program tonight. Lucille, good to have you on the program. So if we strip out one of the big deals in 2019, Naspers spinning out of its tech assets, putting Proces on the market in Amsterdam, how does the 2020 deal volume compare to 2019?
Yeah, sure. Yes, so that one deal, Naspers mammoth $36 billion internet assets spin-off, it accounted for just over half of 2019's annual deal-making total. So it really boosted deal-making in that year and sort of exaggerated the decline in activity last year. But even without this huge deal, we are looking at a 30% decline in deal value from 2019. And compared to sort of 2018, 2017, we're down around 20%. 2020 actually recorded the lowest level of annual deal making in the region since 2012. So we're still looking at an 8-year low. But actually, if we start to look at the quarterly or even monthly totals, it can give us a better understanding of how the year ended and where we are now. So the year started pretty well with deal making in January and February at reasonable levels. And then, like the rest of the world, the COVID-19 pandemic put the brakes on deal making from around March time. The lockdown regulations had this, extensive impact on economies around the world, and Africa was no different. We all know that M&A activity is driven by confidence in the target business and in the economic and the political environment. So deal making just it paused. Companies took a wait and see approach, and it led to sort of less than 50 deals being announced in the region during both April and May. But then what we saw over the summer and through the rest of the year was a lot more positive. M&A gained momentum, so we had between 60 and 70 deals announced during each month from June through to the end of the year. And to put that into perspective, the average number of deals announced each month over the last 5 years is 68. So we're back to a very normal level in terms of the number of deals being announced in the region. And actually, in the last 3 months of the year, we saw an uptick in deal value from the respective months in 2019. Just the uptick wasn't enough to compensate for the sort of the spring freeze.
Indeed. So 2020, though, also was interesting on the monetary policy front because you had central banks pretty much around the world, Japan, the ECB, the Fed. They all were busy cutting rates, making money as cheap as possible to give some room to deal with the pandemic. With rates as low as they are, arguably, why wasn't there more deal flow? I mean, was it a lack of effective demand, or are investors looking at the continent and asking themselves where the investment-worthy companies across the continent?
I think last year, certainly during the first half, the focus of executives was, it was directed more to saving their own companies instead of to, buying others. There were just so many challenges. Valuation was very, very difficult when businesses had come to a complete halt and nobody knew when they would start making money again. In addition to the economic uncertainty and the valuation challenges, there were also physical challenges, so physical constraints, travel restrictions during lockdowns. They all, they proved a challenge for deal making. Meetings and negotiations, they couldn't be made face to face. Site visits, due diligence, all were made more difficult. Deal makers had to adapt, and adapt they did. They used technology to address these logistical challenges. Zoom meetings, video conferencing, data rooms, the use of drones for site visits, etc. So they adapted, but it was a very challenging year for deal making, and it was the same globally. Globally M&A declined, and Africa was no different. But we did see it, gain momentum towards the end of the year. I don't think it was due to a lack of investment-worthy firms. We saw, good investment opportunity across the continent. A lot of growth potential on the continent, and also, harder hit sectors. The pandemic could also create some more opportunities to acquire sort of quality assets at a discount. So we might even see a bit of an uptick this year as well.
Indeed. So looking at where the deals were located, manufacturing at the top, energy comes second, tech was third. But now that it seems we've sort of figured out a pattern that sort of works within this pandemic, might tech vault to the top of that list? Might that order change in 2021?
Yeah, possibly. I think the COVID-19 pandemic, it certainly brought industries into a sharper focus, certain industries into sharper focus. So either because they were pretty much shut down early in the pandemic, or because the demand for products and services in those sectors soared. And tech is definitely one of those sectors. So, it was able to take advantage of the conditions that we saw last year. We all saw how important technology was and still is during lockdowns, both in personal lives and at work. So technology, along with healthcare, have great growth potential, fintech as well, and I think those sectors will attract investment. Tech may have trailed behind energy and materials last year, but we did see investment. We saw that it was the third most active sector. It accounted for a fifth of deals by value. We saw private equity investing in South African internet provider Octotel. We saw investments in programming firm Kathia Communications, in a manufacturer of fibre optic cables. In fintech, we saw Stripe expanding into Africa for the first time with the acquisition of a Nigerian payments firm. We also saw a British company acquire direct payments online. So again, all these fintech opportunities here that we saw last year. And we've started to see investment already this year, with a huge group launching an offer for South African software firm Adapt IT. So yeah, definitely a sector to watch.
I'm going to wrap up relatively quickly because we are running out of time for this. But looking at the value of deals within the continent, we had this overall number, $25.7 billion worth of M&A. But what percentage of that was happening within the continent? Because a lot of the headline deals that we saw, like Stripe's acquisition of Paystack, for instance, that was foreign capital coming from outside the continent, acquiring an African company. But what about deals within the continent? What percentage of that was made up of that 25.7 billion, and what's the outlook for 2021?
Sure. So domestic M&A, so which is a domestic deals within one country, and sort of intra-African M&A, so for example, South Africa and Kenya, they accounted for just over 20% of deal making last year in the continent. And that's the highest share in 3 years, so it's actually increased in share. We still saw a decline in domestic M&A from last year, but it's slightly up on 2018. So I think there's the outlook is good for domestic deals in the region in 2021.
All right, we'll leave it there for the time being. Lucille Jones from Refinitiv, thank you very much.